Okay, everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 21st of August, 2021. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of August. Let's begin with the Euro, and actually, if you see across all these three major pairs, they have moved significantly downwards, especially the Aussie dollar against the US dollar. So, which means when we take a look at the US dollar index, see it climbing up and breaking through key resistance, which is why all these three fell in concert. And that was starting on the Tuesday. So let's take a look at the Euro first. And as I mentioned last week, after the pullback to retest the trendline break, where it broke from the previous week, that was near the 50 pip retracement level at confluence of 118.00. It paused on the Monday, and then from Tuesday onwards, it fell right to the swing low of the previous week, and then fell through that on Thursday, followed by a pullback on the Friday, back to 117.00. So overall, it was a very bearish week with just this, after testing the trendline break. Let's take a look on the, we zoom out. This was the trend line. Let's take a look on the weekly time frame. It was a trend line that was formed a few weeks ago, right from the end of November, end of 2020. And through the low of March. And this time, after briefly testing it and trying to bounce, it already fell through the previous week. So now let's, we can actually change this fib now to flip it the other way around. To find the extension levels. And the 138 fib extension is at 116.32, and the 162 fib extension is at 115.86. So just below the 116 round figure. That's going to be our key support zone. For the immediate term, let's shape this now as a resistance zone where it fell from. All right, then this was going to be our support zone here, just below the 116 and with the 162 fib extension. Let's move this over here as well. All right, we'll see how far this pullback is going to be from next week. It could climb up a bit further to test the 78.6 level, which is the actually the 21 fib retracement. And if it does hit there, then that should be a strong resistance. Give us an opportunity to join the bearish trend. Okay. And what happened even with Tuesday's US retail sales figures, which was bad, lower than expected, the US dollar should have weakened, but instead all the three major pairs fell in concert right to the support zone. And then followed by Thursday, there was also Philly Fed Manufacturing Index, which was also bad. And that didn't provide any help as well for the other major pairs. But meanwhile, on Wednesday, late on Wednesday, the FOMC meeting minutes gave an indication that most of the committee members were looking at possible tapering by the end of the year, and that was the concern, which could strengthen the US dollar once it starts tapering with the asset purchase. So that boosted the US dollar and confirmed the move before the news, and that continued to drive the other major pairs lower. All right, so even with some minor news, which was negative, the main one was the tapering news from the Federal Reserve. Okay, let's also take a look at the US dollar index, the DXY, and that was the drive higher on Tuesday, which pushed all the major currencies down. And that was before the release of the FOMC meeting minutes. And it broke through after Wednesday's release, and there was a gap up on the Thursday here, and climb up above this swing high resistance and broke through finally the 93.45 swing high level from end of March of this year. So this was the major push on the Tuesday. And on Friday, there was a pullback. So we'll see this coming week how far that's been pulled back. Could pull back to retest this break of this trend line of this swing high. And it could consolidate for the week. We'll see. There may not be anything else to drive it further yet until next month's non-farm payroll report. All right, so let's also flip this Fibonacci around to find the extension. And that's targeting the 138 fib is at 95.10. If we take this swing low for a reversal, which should be lower target, that's still pretty close at 94.96. So we could use either one here. On the weekly time frame, there is this swing low, which will prove to be a major resistance. check this level here. That's at the 94.53. To 94.96. So this zone will be a major resistance zone here. But the first resistance will come at this weekly 200 EMA at 94.10. So we could also just mark this level here. All right, that's going to be that trend line here, 94.10. All right. That should align with the weekly 200, which will slowly drift down lower as well. Okay, so let's remove this area here. This should now be a support zone. As well as this other area here. Okay, so let's move back to the euro. And this week there's only across all economies actually the flash manufacturing and services PMIs. But there's a major event from the US this coming Friday with the Jackson Hole Symposium, and the Fed Chair Powell is scheduled to make a speech as well. So that's could be some significant trigger if there's anything new in his speech that he's going to add. We'll see if there's anything else he will add in his policy, but there shouldn't be, because it's already after the Federal Reserve meetings and minutes has been released, so shouldn't be anything major to announce, but more to reaffirm and confirm some of the policies. Okay, let's move on to, we've already identified, yeah. Let's also take a look at the weekly time frame, where the weekly 200 is just below the 138 fib extension. So that's at 116.20. The 138 fib extension is 116.32. So that could also be an intermediate support level before it hits the 162 fib. So just need to watch out for that as well. There could be some reaction there. Okay, let's move on to the cable. And similarly, a strong bearish move down that was started on Tuesday as well. And then on Thursday, fell through the key 200 moving the average, and right to the 136, just a couple of pips above that. right to where this previous swing lows were. So this support zone at the 50 pip retracement that has been broken. And let's leave this one here. Key one was at the 21 pip retracement of this swing move, right at the daily 200 EMA, just above 137. So this zone is zone is now resistance. And we can also flip the Fibonacci levels around so that we can see the extension. And the 138 is all the way down towards the 133.00 area at 133.13. That is a significant move down lower, but needs to break this support first at the 135.72. So let's move this a bit lower to a reversal. And we have a 138 pip extension just above 134, and then the 162 pip extension is just above 133. So we have an intermediate target or support zone. But before that, we also have a round figure area at 135. So that's also a very significant support area. So after last week's drop, there could be a pullback to retest the break. It could be at the 137 area if it climbs up that high, or the 50 pip of this bigger pip swing. Now, if we take a look at the weekly time frame, it did actually hit the 55 EMA week on the weekly time frame at 135.94. It was close. It didn't quite hit it yet. It's getting close to that area, so there could be a bounce and a consolidation for this coming week. And you will need to break that area to target the 135 and lower. So there could be a retest of this zone perhaps. And there could be consolidation next week. It's not necessarily going to fall next week. So we'll see if this support area holds. Now I'm also looking to see if we need to extend this swing It did pull back almost to the 21 fib area, or rather the 78.6. So if we extend from this swing low to this next swing low, it's a major swing low here from probably September of last year. Yep, September last year to this swing low at 126.75. Let's take a look at this blue fib level, and that was the 21 fib area. There's a confluence here, and it has fallen down to the 38 fib. And the next 50 fib retracement is going to be at the 134.56 area. So that could be another intermediate level to find support. And it's just above the 138 fib extension as well. Okay, so we've got a number of support zones to watch out for. Immediate one, of course, is at this swing low at 135.70 area. Next key support is at the 135. Then the next one will be at the 50 fib. Before it gets into the major support zone, just above 134. Okay, so we've got these critical support zones here to watch out for. Might as well identify all these support zones. It may take a while, may not be that soon, and could be towards the end of the year. If the plan from the Federal Reserve to start tapering by end of this year, then yes, the US dollar could continue to strengthen and bringing down all the major pairs lower. Okay, so this previous zone here is going to be resistance. Now, the immediate one is going to be at this area 137, followed by the 200 EMA just above that. Okay. So likewise with the Eurozone, Monday is a flash PMI day for all the major economies, and also is exposed to the Jackson Hole Symposium on Friday. So especially the speech from the Fed Chair Powell. Okay, let's move on to the Aussie dollar. Aussie dollar looks very weak, and also started from the Tuesday. But after a very tight consolidation the previous week, fell hard on the Tuesday and continued its weakness all the way to almost hit the 71.00, when just 6 pips away. So if we take a look on the weekly time frame, it has already dropped below the weekly 200 EMA, and the 138 FIB extension is below the 71. You can see the key support zone, support level is going to be at 70. It's a major support area. So this is definitely going to be a major support zone, the psychological round figure area. Now this swing could be a bit high, and from this double top area, the recent move down, that's the potential target for just below 0.7, and that's at 0.6980. So that could be a likely support zone here. Right, so we could take this swing high. And this is going to be resistance now. So if we look at this, this is like a flagpole with the bearish pennant. And the target will be the height of this flagpole, which is basically the double this 100 FIB. So that's going to be at the 200 FIB. So that's why this is right at the key support zone near the 70.00. So potentially that could be a target. Okay. So Monday is also flash PMI day, but Friday, in addition, there's also the retail sales for Australia, and also same exposure to the Jackson Hole Symposium and speech. All right. So for this week, yeah, I don't think there'll be a follow through for a breakdown further below the 71. So could be pull back to retest maybe to this zone here, just above 72. It could make its way all the way back to 73, but we'll see. But it's weak. It may not do that, and could just consolidate and could consolidate between the 100 and the 162 FIB zones. Let's also check the FIBs for the cable. And yeah, the cable could also consolidate between the 137 and 136. Could just consolidate here. Unless it dips to just test the swing low. But, I don't think it's going to break it that soon yet, but you never know. And then for the euro, it's already attempting to pull back, so that should be support where the weekly pivot was last week. So that's around the 117.60 or 70 zone. And euro though does look a bit weak, so could target the 138 and could be between these two FIB levels. Okay, all right. So let's see how it goes for next week, and it will depend a lot on how the US dollar reacts, and it could also consolidate. So could be a consolidation week next week. All right. Meanwhile, do have a safe week, have a good trading week, and cheers for now.